Volatility is coming, but does it mean the market's ready to fly? In today's daily market waves, we dig into what really drives the move beyond the green candles. From macro to micro, from bonds to crypto, we read the signals before they make headlines. Let's dive in. And as usual, we start with the volatility index. So today's closure was plainly bearish. The index closed with a strong bearish continuation candle, and the same did the futures. So, and futures, by the way, fell just below the 200 days moving average, which is a significant move. If we look at the slightly bigger frame, we have a very similar formation. So now on the 3-day frame, volatility confirmed technically a reversal, a continuation down, and on the 3-day frame for the futures, it is the same situation, and the break below the 50 days, the 50 periods moving average, which is technically 150 days here. Well, that's volatility bearish. We are expecting it to calm down further. Now let's quickly talk about the bond market, but today we have a short session and we'll talk about TLT only. So TLT here is a very concerning, and we have a strong bearish engulfing. So even though at the beginning of the day it looked like it's gonna be a recovery, however, no fooling around, we are looking for a continued move down. And the 5-day frame tomorrow is closing so far with a strong bearish candle. If it moves a little lower here, it might make a bearish engulfing, and we would be looking for a strong move down. On the weekly frame, so far there is no optimistic signal here after a very strong green candle of last week, which by the way failed to break even through the smallest resistance lines. Now we are looking for a continued move down if it closes like this. So we still have 3 days, but let's see what happens. So far, the chart that we made way back in a few months ago, it remains the same. The purple count is still primary at this point, but it's not very strongly primary, I would say. The red count is also on the table with some significant odds, but the purple has slightly better perspective. And tomorrow we most likely will talk about bonds, a bigger picture. Now let's have a look at the dollar index. What we are having here is an attempt to form a bottom. Today, dollar had a piercing line, and if we see a confirmation tomorrow, if dollar closes above the high of the red candle, which is Monday, well, we might see a fairly strong attempt for a reversal. However, I think there is still a chance to move and form a lower low for the greenback. And on the 3-day frame, the candle wasn't able to form a continuation here, and most likely now we have 2 green candles within the red body, so most likely it's just a continuation, and we might see dollar going slightly lower in the next couple of days or periods. And the weekly so far is not making any significant move. However, we can see some divergences here, but there is no strong move on the candle side. Speaking about Elliott Waves, this is the chart that we've been talking for a while, and I'm looking for potential. So this one can be removed now. Not to confuse potential ending diagonal, expanding ending diagonal, targeting somewhere here. So that's the perspective for the dollar. Now let's move on to the commodities. Let's see what candles and Elliott Waves are telling us there. So we'll start with silver. So silver is very interesting metal here. So yesterday it made a very strong green candle, which ended way above Bollinger Bands, and today we had a hammer within the green body. So this is potentially a reversal combination, but we need to see a strong and decisive reversal confirmation. So far there is none, and I'm considering this as at least as neutral. From the bigger candle perspective, there are a couple of interesting combos being formed here. So far, if the weekly closes above this red line here, which is the high of this red candle, so let me mark it here, it's high 344627. 344627. So this is the 344627. So this is the wave. This is 4627. Yes, that's correct. So if the weekly closes above this red line, then we are going to talk about a strong bullish continuation going forward, and well, like some people say, to the moon. However, if it fails to close above this line and forms it here below, well, this is going to be a very strong bearish signal, especially if it drops and closes below this blue line. This would be a double-edged sword. Well, that's for the weekly. On the 10-day frame, we still have almost 7 days to go, and we are also watching this particular level. By the way, this is the same level that we have here, so it would be very interesting to see how it aligns. So far, the chances are 50-50, I would say. And speaking about Elliott Waves, so today, recent move yesterday broke above this blue line, and technically it invalidated the red count, the red at the purple one too. So this is no longer a potential impulse, and I would say that this impulsive wave, it's still valid here, but now we need to look at the bigger picture. So potentially, so this is the immediate impulse broken, and what I would be looking right now is potentially very large corrective wave. So it could be wave, let's say this is wave A, and now we might be looking for another wave of a similar size. So this could be another wave A, B, C, something like this, and this would be wave B, and after that we will have wave C. So this this chart is right now for some cleaning. I'll do it later, and for tomorrow update I'll try to make it a bigger, cleaner picture for this one. So far it's what I would say, that there is a very good chance that silver would make a big rectangle, multi-year rectangle, for being up and down between, within this range, and well, that's the perspective. But let's see how it closes the week. It would be really important, especially if it breaks above this red line. If it doesn't and make a move lower, well, then we would be looking for this potential big rectangle. And another concerning part here is SLV Trust. So we have a strong candle above Bollinger Bands, and we have a clear bearish harami today. Now, if this candle combo resolved downwards, we might see a very strong reversal. So this this candle, the weekly one, is still developing, and if it closes below the green line, it would be a big concern. Let's see, 2-3 more days. Well, now let's talk about gold. Gold, I think it's more decisive from this perspective. So far, the trend is bullish, and this candle, the red candle that gold formed today, could be just a consolidation one and opposing candle before moving higher. So far, there is no concern here. But if we start looking at the bigger frames, this is where the concern starts. So first of all, this is the 5-day frame, which failed to close above the previous candle high, and this already a moderately bearish formation. However, it requires a confirmation. Speaking about the weekly frame, there is no clear message here. There is still a build up, which potentially can flip bearish or bullish. So we need to see a clear print. Now speaking about the Elliott Waves. So this is the chart, and what we discussed previously. This is a potential break of an impulsive structure, potential ending diagonal, expanding ending diagonal for wave 5, and well, this is the target of from the flag. Well, if it plays like this, well, we might see a very strong reversal once this diagonal is complete. So, and for diagonals, it would be normal to strongly move above this blue boundary of upper boundary of the diagonal. Well, now let's talk about the momentum here. So the momentum is concerning too. So this is the 3-day momentum on a MACD, bearish MACD, and this is the 5-day, the next one. So far, we have 3 candles, like a perfect setup for following 3 methods. This is the one. So this is 3 candles within the red body, and if we think about the bigger one, this could be the first candle down, 3 up, and another one down for the next 5 days. So far, this formation is bearish. Let's see what happens next. But the risks are fairly high here. And the last one on gold, I'd like to talk about the GOD trust. It is concerning, to say the least. We had a strong bullish candle and now a red one, very similar to what happened here. Very similar formation. So this one and this one. Well, and right now, if we see a confirmation tomorrow, another red strong candle, we would be looking for a big decline. And this is the weekly formation we already discussed, a very green and strong bullish and bearish harami, and almost ideal bearish harami. So now in a classical move, we have a challenge here. Gold at GLD attempted to negate the harami, but it looks like it is losing right now. So a closure between the red and green lines would be technically either neutral or bearish. So we are waiting for another 3 days to see its closure. Now let's talk about the GDX miners. From the candles perspective, we have 2 big concerns. On the daily frame, we have a bearish harami, and on the 8-day frame, which closed today, we have a minor failure. So ideally, this candle, for a bullish path, it needs to close above this red candle's high. So it failed by just few basis points. And now this formation is technically bearish. So then if the next 8-day candle forms makes it lower and forms a red candle, it would be absolutely normal, and the odds for this are fairly significant, so beware. And for the GTX chart that we've been tracking for a while, this was a bearish flag, a bullish flag, pardon, and this is the most typical targets for the move like this. So I would expect another higher high to complete this wave, and how high it would be, I don't know. 58 is an ideal target, and beware, we can see a reversal here. Now let's move on to the energy sector, and let's talk about natural gas. So we have technically a red candle here, which can be viewed as a hanging man. However, the technical support for this candle is quite bullish, and this could be just an on-neck candle, which is viewed as a bullish continuation, and a break through multiple support, or now support lines like 50 days moving average, 100 days moving average, is fairly significant move. And just to reinforce bullish odds, this is a 3-day frame and an inside up bullish candle. So far, on the candles, from the candles perspective, natural gas is bullish short term, and our Elliott wave remains the same, so I'm not changing it. This is potentially wave 3 that is being started right now. A break below this red line would invalidate the setup, and we would be looking for alternative wave 2, for a bigger wave 2 before launching wave 3. And I'd like to remind that longer odds for natural gas remain bullish. Now let's talk about oil. So what we have for oil, technically oil formed today several bullish candles. It reconfirmed 8 by 20 MA bullish cross. It moved above the 50 days moving average for the first time since when? Since March. Well, and now we are looking for a continued move higher. On the 2-day frame, inside up, very strong bullish candle, and the 5-day frame also closed with a bullish candle. So the chances for a continued move are significant. Speaking about the Elliott waves, this is the chart we already discussed, and there is a possibility that we could see a continued move higher towards 68 or even higher. We discussed a few other perspectives with our members, and I shared the daily report, last 2 daily reports. They contained a lot of information, targets, and bigger pictures for the perspective move. So if you're interested, you can also visit our website investingangles.com and check our energy section. Speaking about the major trio, so they formed today strong bullish engulfing candles, and I think that Exxon, Chevron, and Conoco, all three are set for continued move higher. So, and they might even form a bigger bottom depending on the size of the move. But we'll talk about it once it happens. But be prepared for some move upward. So that's all about energy, and now let's talk about the stock market. Today we had quite a few interesting moves, signals, and we need to evaluate them. First of all, I'd like to say that all candles, daily candles for SPY, QQQ, DIA, and IWM, daily candles were bullish. They confirmed a bullish reversal, and we are looking for a move higher. Dow Jones moved above the 100 days moving average, and it broke above the 200 days moving average, which is normally a very long term bullish ride. Russell broke through the 100 days moving average and is also getting some significant technical support. So we are looking for higher prices. Speaking about the potential prospective weekly closures, I'd like to say that it looks like S&P 500 is going to reinforce the 8x20 EMA weekly bullish cross. Nasdaq is already there, and the Dow Jones is getting closer. The same for Russell. So far the candles look very bullish. If they add another 1-2% by the end of the week, it wouldn't be surprising at all. Now let's have a look at the Elliott Wave chart. So this is the chart we've been tracking since April 22nd, and S&P 500 already made, I think, 13+%. So far, after today's move, I would say that the purple and red counts lost their very high probability, and right now we would be looking for a green count. It is becoming primary. I think as soon as we have a new all-time high for S&P 500, we would be talking about green path only. And this is the chart that we shared just a few days ago on Friday. I think that this is wave 3 that we are looking right now. S&P 500 is developing right now, and this is the most typical lens for wave 3. However, at this point, I think there is a very good chance that this wave could be extended higher. How high this is, this we don't know yet, but I think that we would be able to evaluate it with the weekly closure. Now let's talk about sectors. So all sectors except utility supporting a move higher. Financial, a strong bullish continuation candle. The same for technology, industrials, healthcare finally talking, and consumer discretionary is also bullish. Staples are somewhat neutral, but the chances for a move higher are significant, especially if we consider a freshly made 50 by 200 days moving average bullish cross. Energy, even energy is recovering, and this is just another support for the very bullish candles that we just saw in for energy, for Exxon, Chevron, and Conoco. Utility is the only one concerned, but the candle itself needs a confirmation because it could be on neck candle, and it might not even trigger a reversal. So the majority of the sectors are aligned for a move higher. Speaking about Nasdaq is practically aligned with S&P 500, and I think we would be looking the similar situation. We have a green path right now, which is which has slightly higher probability. So if we see the Nasdaq moves towards a new all-time high, then we would be looking for a cancellation for this red and purple path. And the final discussion of today is Bitcoin. So far, Bitcoin has been bearish. We know that it formed a very strong weekly bearish candle on the 10-day frame, bearish engulfing, and today it also formed a bearish engulfing on the daily frame. However, if we look at the Elliott Wave chart, which is this one, and I think I'll make it, move it to the 2-hour frame. So far, this blue count is broken right now because of this overlap. This potential wave 4 overlapped with this one, and now it cannot be wave 3. Wave 3 cannot be a diagonal, and this is not an impulse. And it also, considering that this was wave 3, it also doesn't work, because if this is wave 4, for example, it also overlaps with 1. So blue count is technically scrapped here. So the only one remaining is the red one, and this is what you might see. So this is an ABC, but this wave up is not exactly an impulsive wave, and it could be just another bearish flag here. And I'm very interested to see how it develops here, because we might be looking for a bigger bearish flag, something, pardon, this would be a bullish flag, something like this, for example. If Bitcoin makes one more lower low here, we would be considering this as a potential wave WXY, something like this, WXY. And this would be wave C, the entire correction here, or pardon, not wave C, it would be wave 4, for example, of a bigger impulse, and we would be looking for another rally towards all-time high. So far, this is the perspective, and I think that this can be removed right now, and we would be looking for a corrective move downward. So that's the perspective, and I would say if it drops here, the chances of now we can try to evaluate approximately. So this would be, I think, somewhere here. This would be the perspective target for this bearish flag, somewhere between 100,000. We mark it here, so it's somewhere between 100 and approximately 97. So that's a very ballpark estimate, and I'll make the chart more clean and accurate for the tomorrow's presentation. Well, that's the perspective for Bitcoin, and the final discussion is here. So this is the one daily that it closed with a bearish engulfing yesterday, and we know that the chances of moving lower are significant. This is the chart that we discussed before. So if this is indeed the wave 2, or a retrace for something, then we would be looking for decline. But based on this estimate, we have 97,200. So we would be looking for this potential 100 to 97. And in this case, it would be possibly wave 4 of a bigger wave up. And in this case, this is wave 3 moves here. This would be wave 4 and wave 5, something like this. Again, this requires some cleaning and some additional discussion. Let's see how it closes tomorrow. So far, I'm expecting Bitcoin to move down, but maybe not very significant. And now let's talk about our swing room. As of Monday, our SPY signal in the swing room was cash. And if you've been following Master David's trading signals, you've seen precision in action. Since January 2025, the SPY strategy has delivered a 12% year-to-date return, unleveraged. By comparison, SPY itself is up just 0.56%. So if you are serious about trading and want to test the waters, drop a note to help@investingangles.com. We are offering a sizable entry discount to committed traders ready to step up. And let's wrap. As the week unfolds, volatility continues to cool, drifting lower just as we expected. But don't mistake the calm for safety. Markets have a way of striking when least expected. TLT tells its own story, shedding value and echoing the uncertainty in bonds, while the dollar, quietly and methodically, begins to sketch what looks like a bottom, one that could matter for weeks to come. Over in commodities, gold shows strengths on the surface, but technical risk is quietly rising beneath. Silver, on the other hand, still hasn't made up its mind. It may continue wandering inside its multi-year range. Those moonshots might need to wait. GTX keeps pushing, and one more higher high seems likely before the miners take a breather. Then there is natural gas, as volatile as ever, shaking out weak hands. But when the dust settles, the bullish case remains intact. Oil seems to have had enough of the bearish pressure. The bounce might be more than just a fluke. Turning to equities, the SP 500 and Nasdaq both suggest a strengthening foundation. The sectors are lining up, slowly but clearly, for another leg higher. And just when everyone thought Bitcoin might collapse, it throws a curveball. A major Elliott Wave break is challenging the bearish narrative. The next move could surprise many. If this kind of insight helps guide your trades, subscribe to our weekly digest. It's the best long-term perspective you'll get for the price of a cup of coffee. Like, share, and ring the bell so you never miss a turn. Follow us on socials and check investingangles.com for exclusive offers and deeper analysis. This is Investing Angles, where we chart the turn before the crowd even blinks.